Your factory incurred the following expenditure during the last year. You have information about the materials consumed 12 lakh, manufacturing wages that is 7 lakhs, manufacturing overheads the fixed one is 3 lakh 60,000, variable is 2 lakh 50, so total is 6 lakh 10,000 and total cost is 25 lakh 10,000. In the next year, the following changes are expected in production and cost of production. Production will increase due to recruitment of 60% more workers in factory. Overall efficiency will decline by 10% on account of recruitment of new workers. There will be an increase of 20% in fixed overhead and 60% in variable overhead. The cost of material will be decreased by 6%. The company desires to earn a profit of 10% on selling price. Ascertain the cost of production and selling price for the year. So the production is expected to increase because of recruitment of 60% more workers. Okay, so it means your production should go up by say 60%, or let's see, it may not go by or go up by 60%, but the production is increasing and there is a relationship with the percentage of workers. So now you have 12 lakh as material cost and this should go up by 60%. Okay, so we'll have a working note. We'll have a working note 1. Working note 1, computation of direct material cost. Computation of direct material cost. In that you will have the existing cost. First one, what is your existing material cost? That's going to be 12 lakhs. Then you will have to accommodate increase, right? Then increase in materials. Why your materials are increasing? Due to increase in volume, due to increase in production. And what is the expected increase? 60%, right? The expected increase is 60%. So let me mention that also, hyphen 60%. So that is going to be 12 lakh into 60 percentage. So since the volume is going up, your material will also go up. You will have 7 lakh 20,000. Okay. Then there is a mention that the material cost will be decreased by 6%. So we'll find out what is the total material cost now in this scenario. Total material cost, that is your 1 plus 2, how much? So it's going to be 19 lakh 20,000, but you will not pay this 19 lakh 20,000 because there is reduction in material cost, less 6% reduction in material cost. How much? 6%. So 19 lakh 20,000 into 6%, it works out to 1 lakh 15,200. So your net material cost, okay, item 5, net material cost, which is 3 minus 4, how much? 19 lakh 20,000 minus 1 lakh 15,200, it works out to 18 lakh 4,800. So this is your material cost. Okay. Similarly, we should also find out for labor cost. What's your present labor cost? 7 lakh. And what are the information you have? The overall efficiency will decline by 10% on account of recruitment of new workers. Efficiency will decline, but the overall output should increase, right? Earlier you were paying 7 lakh, now there is a 60% improvement in capacity. Okay, so you have to pay additional 60% for wages, but efficiency have come down, so your labor cost will actually go up because the workers are now going to take 10% more time for completing the output. So let's see how it goes. We'll have working note 2. We'll have working note 2 where we'll calculate labor cost, computation of labor cost. So in that we'll calculate what is the existing cost. Existing cost information we have, it is 7 lakh. And what is going to be the increase because of increase in production? 60%, right? So increase in labor cost, I mean due to increase in production at 60%. So it will be 7 lakh into 60 percentage. So that is 4 lakh 20,000. Okay. Now this is going to be your total cost. This is going to be your total labor cost. Actually, this should be your total labor cost, which is 1 plus 2. But what is going to happen here is you are not going to end up only with this because there is an inefficiency now. What is the inefficiency? Overall inefficiency or overall efficiency will decline by 10% on account of recruitment of new workers. It means you cannot get your work done by paying this 11 lakh 20,000 because this is only for 90% of the output because the efficiency have come down by 10%. So you have to spend more, a further 10%, only then you will be able to achieve 100% efficiency, because this amount actually goes to 90% efficiency only because there is a drop in efficiency by 10%. So item number 4, we have to add, okay, that is 10% increase due to fall in efficiency. So 10% increase due to fall in efficiency. Okay. So how much? 11 lakh 20,000 multiplied by 10%, that works out to 1 lakh 12,000. So now we'll have the total labor cost, okay, or we'll say the net labor cost, and that is item number 3 plus item number 4. So that's going to be 11 lakh 20 plus 1 lakh 12,000. So it is 12 lakh 32,000. So in this way we have the net labor cost. Next, we should find out the fixed overheads and variable overheads because they are also undergoing a change. If you notice, the fixed overheads will increase by 20%, variable overheads will increase by 60%, and it is fairly simple. We can find out. Let's have a working note 3. Working note 3, computation of overheads. Computation of overheads will have a small table, particulars. Then we'll have the computation, we'll have a column for computation because they are undergoing change, and then we'll have a column for amount. Okay, so particulars in that first fixed overheads. Fixed overhead, what is the amount for fixed overhead? It is 3,60,000, but that will increase by 20%. So here we'll have, it is going to be 3,60,000, 3,60,000 plus 20 percentage. Okay, so this will be, let's see how it works. 3,60,000 plus 20%. I'm sorry, I'm wrong in that calculation. Yeah, it is going to be 3,60,000 plus 20%. So I can say this is for 100, what is for 20%. So what I can do is I can multiply with 120%. So that tells me my fixed overheads will be 4,32,000. Then I'll also have my variable overheads. Variable overheads, what is the amount? It is 2,50,000. So 2,50,000 plus there is a change by 60%. Okay, so here I can have it as 2,50,000 multiplied by 160 percentage. So it is going to be 4 lakh. Okay, so now we got all the information. We can take them to a cost sheet where we'll be able to find out what is the cost of production and selling price. Okay, so here let us have that cost sheet. So the structure is ready. Let's capture one by one. The first one is direct materials. Let's go back to our working note 1. We'll give a working note reference as well. We have to pick up from working note 1 how much. The amount is 18 lakh 4,800. So what we'll do, we'll make a reference of working note 1. We'll call it as working note 1, and amount, let us pick up from that. It is 18 lakh 4,800. Then direct labor. direct labor, and I believe it is working note 2. We'll pick up the amount. Working note 2, direct labor is 12,32,000. Okay. Then we have the overheads. Okay. Fixed overhead. Fixed overhead, I think we have it in working note 3. Let us pick up the amount. It is 4,32,000. 4,32,000. Then we have variable overhead. Let me type that. Variable overhead. That also comes from working note 3 and it is 4 lakhs. It is 4 lakhs. So if we add all this, we'll get what is the total cost of production. So let me write total cost of production. Total cost of production is 38,68,800. Now, with this, we have to add profit. But what is the information we have in the question? The company desires to earn profit of 10% on selling price. If you want 10% profit on selling price, your cost should be 90% because 90% and 10% makes the selling price as 100. Okay. So if you have cost as 90%, then you can find what is 10%. So what we have to do is we have to assume this 38,68,800 as 90% so that we can find out what is 10%. So let me do that. Profit, let me put that this 38 lakh 68,800 is basically for 90%. Then we have to find out what is that 10%. Okay, so that will tell us what is that profit. So we have to give the calculation. This 38 lakh 68,800 is for 90. What is that 10? And that works out to 4,29,866.67. So if you add this profit with your total cost of production, you'll get sales, and it is how much? It is 42,98,667. And now if you want, you can cross check. Apply 10% on sales, you are getting the same number, right? You are getting the same number. So either way you can approach, but you have to ensure the correctness. So now you can arrive at what is your sales, the desired sales value, which is 42,98,667 if I round off. Thank you.
Thank you for watching this video. Hope you liked it. If you wish to learn more on this topic, do check our comprehensive online course. I have given the link in the description below. If you like this video lecture, do not forget to click on that like, share and subscribe button with bell icon.